Okay, so I'm going to go through it then, and we can obviously check what you've done, and you can see if you're on the right track. Obviously, assignment 2 is going to be looking at content that we've covered more recently. I can see from the assignment information here, we're going to be looking at learning units 1 to 6. So they haven't tested the capital gains, they've only tested everything up until the capital allowances. So that's what we're looking at here in terms of content. Assignment 2, question 1, 25 marks, 30 minutes. Okay, you've got a company, D Limited, manufactures and supplies spark plugs to the local automotive industry. D Denso, okay, has a February year end and is not an SBC. Okay, that's very important because if they were an SBC, they can obviously claim additional deductions and allowances based on their classification. So because they're an SBC, you're not going to apply any of those special deductions or special allowances. As defined by the Income Tax Act, the company accountant has performed a basic tax computation and requires your assistance in calculating the company's taxable income. Okay, so with taxable income, we obviously need a template. We know that taxable income will start with gross income, and then you'll obviously less deductions and allowances. Then you'll add any taxable capital gain. And then you'll get the taxable income. Do you agree? Do you agree?
Yes.
Okay, great. Okay, I lost you there for a bit. All right, so taxable
Yes.
income is going to focus on what the company actually has to pay tax. And then if you want the liability, then you'd have to apply the tax tables or a flat tax rate, depending on what type of business we have here. Right, because it's a company, a normal company, they're not going to have a sliding scale. Okay, they're not going to have a tax table. So then you would just use company tax at 28%. Okay, so yeah, that just depends on what they've asked you to calculate. So let's do this, at least then I can also write things in as we go. Okay, so taxable income for the 2021 tax year. The accountant has recorded the taxable income as, okay, so you've got something to start with. Okay, he has made no allowance for any of the points listed below. Right, so as part of gross income, okay, you can put a working figure that will be adjusted. Okay, so in other words, taxable income before adjustments. Okay, other stuff. Right, so obviously these are a few other things that you need to take into consideration, but at least we're starting with something. So I'm just going to put a total column here at the end. Okay, so in the total column, we have something to work with, 22,750,000. Okay, let me make that as a rand figure. Right, so there's your 22,750. All right, and then we've got different deductions. Okay, they've told us that he has made no allowance for any of the points listed below. So we need to provide for those things. All right, so if we do have income, other income, we'll obviously include it here. Any other deductions or allowances would obviously go under there. Okay, so those are important headings that you're obviously going to be using to work out your final taxable income, the one that will actually be used to calculate the tax. Right, so number one, legal fees of 20,000 were paid to attorneys in Ngubani Incorporated for debt collection. Right, remember with legal fees, the big question that you need to ask is, does this relate to the business's operations, or is this unrelated? So, do you think legal fees related to debt collection would be part of normal operations? What do you think?
Yes.
Good. Okay, so even if it wasn't, you would still put it in here. And that's the whole exam technique in terms of, again, I don't know how they're going to do this because it's going to be online, but in the past, so obviously before COVID, you had a scenario where students would have written these assessments in an exam venue, and you would have actually created your solutions on folio paper. So with something like this, whether you include it or not, if you didn't include it, you would obviously put null, okay, or zero. But you've got to still show it. Okay, that's the only thing with tax, is that you have to show everything, and then you've got to discuss it, and then you've got to basically summarize and all of that. So whether you do need this or you don't, you have to insert it. Okay, so legal fees you would insert, and you might say for debtors. Okay, or in brackets, debt collection. All right, so obviously if you're going to incur legal fees or costs to recover outstanding debt from your debtors, it would be seen as an allowable expense, okay, as an allowable deduction. So this 20,000 would be deductible, so you would show it as negative 20. Okay, remember in accounting, okay, even in tax, this figure would be shown in brackets. Okay, so a bracket 20,000. Okay, I'm just going to put a negative there just to show it. Maybe I'll even put it in red. Why not? Okay. All right, so obviously it's negative. Did you have the same thing?
Yes.
Okay, good. Right, number two. Eddie, an employee, resigned during the year. He was paid an amount of 4 million. The agreement stipulated that Mr. Hamilton was unable to work for any of his competitors. So obviously, this is a restraint of trade. Do you agree?
Yes.
Okay. The restraint of trade is for a period of 4 years. 4 million was included in Mr. Hamilton's taxable income. Okay, so obviously, the person deriving the benefit is going to get taxed separately. So you would be able to claim a portion. Do you agree?
Yes.
As a deduction. So we need to apply that rule. I've got the notes open actually. Where's it? Let me just find it here. Oh, not the notes. I've got the textbook open. Actually, it's fine. I'll use the textbook. This is a restraint of trade. So you're using the lesser of, I think it was 3 years. Yeah. Let's just check
Yeah. 3 years.
restraints.
So lesser between 3 years. Yeah.
Yes. Restraint. It's not coming up. Oh, spelled incorrectly. Okay. All right. Restraint of trade. There we go. Restraint of trade, page 97. Okay, a little bit before this, page 97. There we go. All right, so you've obviously got restraint of trades where the amount is going to be the lesser of. Okay, let's just find the beginning. There's the beginning. Right, restraint of trade payments. Obviously, it's limited to the deduction shall not exceed, okay, in any 1 year the lesser of. Okay, lesser of meaning the smaller amount. Okay, the amount incurred divided by the number of years during which the restraint will apply, or 1/3 of the amount. Okay, so you have to show that. Again, exam technique is very important. So you would insert, let me just go back to the question. Nope, where's the question? Wrong one. This one. Okay. All right, restraint of trade. Okay, so I would insert it as is like that, and then you would say, okay, what was it? It was 4 million for a period of 4 years. Okay, limited to the lesser of. And then you would have to show the working. Okay, so you'd have to show 4 million divided by 4 years equals 1 million. Do you agree?
Yes.
And then 4 million divided by 3 years is 1.333 million. Right, so which is the smaller amount?
1 million.
Exactly. So you're going to show a million there. Does that make sense?
Yes.
Okay, right. So all of that's important. As I said, if this was a written exam, UNISA should actually give marks for this, right? Because you can't just show a million and then get all the marks. You have to also show workings, right? And that's how they used to do it, and that's how other institutions do it as well in terms of marking, especially with tax. You've got to show everything. You've got to show the application of the legislation, basically. Right, you're basically telling the marker, whoever's marking this, that I know what rules to apply and I've applied the rule correctly, and that's the answer. Okay, so it's important to show this. I'm hoping that they do give marks for this as well as part of this assignment, but we'll see. Okay, all right, so that's correct. You've got that right. You had the same thing, yes?
Yes.
Okay, good. All right, number 3. Okay, so this was obviously point 1. I'm just going to label these points so at least then when you look at it again, you've got the right workings. Right, so D, conduct qualifying technological research and development. Okay, so this is obviously when you see research and development, you're thinking those, what's it called? Copyright and trademarks. That's it. Okay, so when you're looking at anything research related, you're thinking along those lines. Okay, where you've got trademarks, where you've got research, development, all of that stuff. Okay, it's part of the government's, let's say, incentives to encourage people to innovate. Okay, so obviously,
Just, just a query, Anthony, because on the notes, research and development was its own point. It actually wasn't under patent and copyright.
Yeah, but it's similar in terms of what it's focusing on. Because here, if you've got, sometimes they talk about patents and copyrights as part of this, because
Okay.
you can obviously research and develop something that will be then patented or trademarked or copyrighted. Does that make sense?
Yes.
Yeah, so they're linked, but in this case, okay, I haven't read all of it yet, but if we read it, then we can obviously see. But obviously, when I see that, okay, I'm already thinking along those lines, basically. So I'm thinking about those specific deductions for trademarks, patents, all of that stuff. Does that make sense?
Yes.
Okay, yeah. All right, so that's the initial thought. Let's continue reading. Okay, approval was obtained from the Minister of Science. Okay, so obviously you need approval, okay, for these costs, okay, this research and development, before the research activity commenced. And the requirements of Section 11D were satisfied. Okay, so that's a very specific deduction. The following research costs were included. Okay, so research building erected. Okay, so they created a building to do this research and it was brought into use on the 1st of September. Okay, you might be thinking capital allowances here, but remember this is for research. New equipment brought into use. Okay, but this equipment is also specific to research. Okay, you're probably also thinking a wear and tear allowance. Okay, remember you can't claim two allowances. So if you're claiming a research and development allowance on your building and your equipment, you can't also claim a wear and tear allowance on the equipment in terms of use or the building that you've bought or created. And then you've got operating costs. Right, so you've got 3 separate considerations. Right, so again, just to go and look at the actual content, the textbook is your best source of information here instead of having to go to legislation. Let's search research costs. Okay, that didn't come up. Let's go research and development. Okay. All right, yeah. So see here, acquisition of patents, copyrights, and designs. You'll see the deduction does not apply to research and development costs. Okay, you can see that it's not specifically part of it because this is separate in terms of your deductions. Okay, so this is a section 11 GC. Here we're looking at section 11D. Okay, so a specific section covering a specific topic. Okay, let's just go next. Here, research and development expenditure, section 11D obviously applies to it. We just need to look at the criteria here. Okay, actual deduction. The deduction is 150% of research and development expenditure actually incurred directly or solely in respect of research undertaken in South Africa. So we can tick all of these things. Production of income, carrying on a trade, and where the minister has approved it. Has the minister approved it? Yes, we read that. Do you remember seeing that in the question?
Yes.
Okay. All right. And then we have a note here where the expenditure is incurred on or after the date. The Department of Science and Technology receives the application for approval of research and development. Okay. So the expenditure is incurred on or after the date that they've approved it. Okay. No deduction may be allowed in respect of immovable property. Okay. Notice that. See? Immovable property, machinery, plants, equipment, utensils, or articles except for prototypes or pilots. Right, so what did we have here? Did we have a prototype? Was there a prototype or a pilot? No. Do you agree?
No. Yes.
Okay. Right, note from the, okay, January 2014, the 11D deduction is only available to taxpayers that are companies. That's fine. Research development carried on by third party. Okay, we don't need that. I think that was it. Yeah, this is just there. Non-qualifying expenditure. This is also important. Okay, because some things aren't allowed, some things are. Okay, so routine testing, any of that will be allowed. Developing internal business processes, that will be allowed. Research, social science research, including arts and humanity. Oil, gas exploration, creating of financial instruments, creation of enhanced trademarks of goodwill. Any expenditure contemplated as per section 11 G, B, and GC. Okay, obviously G, B, and GC is a separate deduction. Okay, that's for copyright and patents. Okay, so that's non-qualifying expenditure. Right, so if we have any of those, that falls outside the scope because it'll be covered elsewhere. Okay, what else do we have here? Yeah, that's it. Okay, so all we just need is this, the actual deduction. All right, so research and development expenditure, let's go. Okay, so point number 1. First bullet that we had was research building erected brought into use on 1st September 2020. Okay. Is this going to have a section 11D deduction? No, it won't. Do you agree?
Yes.
Okay, so research building. Okay, because they said this was an erected building, it wasn't specific in terms of the actual research and development based on the criteria. So this building, not deductible. You would show 0 here, null. Okay, the new equipment brought into use. Again, if you go back to what we just looked at, they said here, no deduction may be allowed in respect of immovable property, machinery, plant, implements, utensils, or articles except for prototypes or pilots. All right, so this was equipment. Do you agree?
Yes.
Okay, so we can write that in as well. This was new equipment, not deductible. Okay, so null here as well. And then operating costs for the period 1 September to 28 Feb. Okay, is that during the tax year? Yes, it is. So the 200,000 would be deductible. So this would be operating research, operating costs, deductible at 150%. Let me go back to this. Okay, 150% of the expenditure. Okay, so 150% times 200,000 gives you 300 as the deduction. Do you agree?
Yes.
Okay. All right. So because I didn't claim any research allowances or deductions on my equipment, now I need to look at the section, um, the capital allowances. Okay, for these other things. Okay, so copy paste. Okay. Okay. But we're going to apply the capital allowances. Okay, so here we do need notes number 6. Let's open it here. Capital allowances. There. No, this, yeah, movable. Okay, we want immovable first. Okay, there we go. Immovable assets. Building only deduction if used mainly for manufacturing? No. Commercial buildings must be used for the purposes of a trade. Okay, to me, this is more commercial than manufacturing. Would you agree? Actually,
Yeah.
what type of business are we running? We're in the automotive business, so it actually is manufacturing because they're manufacturing spark plugs. But this is for research. So, because it's specific for research, I would say it's more commercial than manufacturing because I'm not making the spark plugs. Does that make sense? Are you still okay with
Not
that?
really. Could you just say that again?
It's not manufacturing because they said mainly for manufacturing. I would say it's more commercial. So I would rather apply section 13 quin than section 13.1 because I wouldn't say this is manufacturing. Okay, I would say this is more commercial because it's for the actual research. Okay, there's no manufacturing that's going to be done in that building that's specific for research. But there, it's going to be
Okay.
5% either or.
Yes.
Okay, so I don't think it'll matter too much which section 13 you go with, if you go with 1 or if you go with quin. Obviously, it would have been nice if they gave a bit more information because they said research and this was a research building. Okay, I would say this is more related to more of a commercial type building than a manufacturing specific building. But you could motivate either or because they're making spark plugs because they're making spark plugs because of the type of business they're running, you could maybe say, well, it's more manufacturing, used mainly for manufacturing, because they're probably going to have to test spark plugs, test stuff, test machinery, test this, test that. So you could possibly go this one as well. Okay, but it's 5%. Okay, so you're going to take 5% as an allowable deduction. Do you agree?
Yes.
Okay, so okay, the building immovable allowance applied. Okay, and then I've also got to show that working. So the building was worth 5 million. times 5% equals 250,000. Okay, did you have the same thing?
So my mistake was I included the 6 million.
The equipment is separate. That's something different. That's not immovable. That's movable. Equipment would be movable capital allowances. Does that make sense?
Yes.
Okay. All right. So yeah, now we're gonna look at that. Okay. So let's go back. Okay. So we've dealt with movable. Okay. There, movable. Section 12C. Wear and tear allowances on new or used plant and machinery in the process of manufacturing. Okay, I wouldn't say this is in the process of manufacturing because this is specifically for research and development. Research and development would be separate from manufacturing. So I would be looking at this, a non-manufacturing movable assets. Okay, because these equipment items are not going to be used for manufacturing, but they'll be used for research. Does that make sense?
Yes.
Okay, so I'm going to be using this is section 12E. Okay, no. Can't use that one. Go back. Yeah, so 12C, you've only got 12C, and then you've got 12E, which is for SBCs. Okay, and then you've got wear and tear for movable assets. So if you can't claim 12C and 12E, then you'll have to claim 11E. So we need to go back and we need to check. Did they talk about the equipment at the bottom? Normally they give you the expected useful lives. No, they don't. Okay, so if they didn't give you that, you can't apply 12E then. So if you can't apply 12E, then I'm going to apply 12C, but then I have to assume manufacturing. Does that make sense?
Yes.
Okay, because normally they should give you like an expected life because remember, SARS will have their own rules regarding the amount of time that you can use to write off certain assets, movable assets according to wear and tear. Does that make sense?
Yes.
Okay, so specifically for this one, only because I wasn't told in the question. Okay, I'm gonna, but 12C can apply assuming the research equipment is used for manufacturing. Which again, it could possibly be the case because you do have a manufacturing entity here making spark plugs. Okay, so maybe the machinery that you're using to do research and development would also be used for production. Okay, manufacturing, right? We don't know, but we don't have anything else to work with. So that would be my assumption. Okay, so I'm going to assume that it is for manufacturing. Then I can use section 12C. Then I'm going to be using this. Okay, wear and tear allowances on new or used equipment for the process of manufacturing. Okay, was this new or used?
New.
Yes, this was new. So we've got R1,000,000 new. So if it's new, you're going to use 4 years. All right, so write-off will be 40% for the first year. Do you see that?
Yes.
Okay. All right, so that'll be 400,000. Okay, did you have the same thing? No, I think you would have combined the two, looks like it, hey? You said 600,000 earlier.
Yeah. That's where I made a mistake.
Okay. Yeah, because it's equipment would be movable, and then the building would be immovable. That's the only thing you just have to look out for. Okay. With tax,
Okay.
normally when it's separated like this, it will always be separated. It'll always be you'll never ever combine these things. Right? That's just basically something to look out for because things have to be given and they have to be very specific. Remember, SARS is very very specific, so they don't tend to group things in any way. So that's just something to consider. All right. Does it make sense?
Yes.
Okay. All right, next is an annuity. Okay, so here they said an annuity of 2,000 Rand per month was paid to a former employee. Okay, Michael, who retired on the 1st of Feb due to old age. Okay, again, this is very specific. When you see old age, you need to go and check the legislation because if he's an old age person, an old age employee, and you're paying him out some sort of compensation, okay, does the compensation or can the compensation be deducted from the business as an expense? Okay, so this is almost like a retirement annuity type scenario where you had someone working for you for a long time and then they basically retire and then now you're paying them this annuity for the rest of their life. If that's the case, this would obviously be an expense. Do you agree?
Yes.
So, as a business, you want to know, can I actually deduct this as an expense? That's what you're actually looking at. Does that make sense?
Yes.
Okay, so again, let's just check it here because then we'd have to open up the other slides. This would be an annuity, all right, to an employee. Okay, annuity to employee. There we go. All right, this is there. This is annuities paid to former employees on retirement. Okay. An employer may deduct in full any annuity for each year that it is paid to a former employee, provided that the employee retired on grounds of old age. Ah, does it apply?
Yes.
Correct, it does. Okay. It can also apply to dependents and former employees or partners, but it has to be very specific. Okay, it must be due to old age, ill health or infirmity. Okay, and then again, if it's paid to former employees, a taxpayer may deduct an annuity paid to a person who is a partner in the taxpayer's business who has retired on the grounds of old age, ill health, and infirmity. However, the following must apply, and then you've got to look at these. Retired person must have been a partner, okay, for 5 years, etc. Okay, so this is very, very specific. Obviously, we have a scenario that applies to old age. Okay, so we just read it. Can you deduct all of it? Yes, you can. Make sense?
Yes. Just a question on this one because they did say he retired on the 1st of Feb.
Yes.
So I deducted 12 months,
Yeah, well,
but
you have
it's
to count the
actually
dates.
13
The
months.
Yeah, you have to count the dates or the months. So obviously we're looking at the
First March.
2021 tax year, and we know that the year ends February year end. Okay, so obviously, if I'm looking at 2021 and he retired on the 1st of Feb 2020, that means it'll be from March. Yeah, so it's every year. So yeah, you'll have a full year here. Okay, because it's from 1st March
But
2020 to 28 Feb 2021.
okay, but would it be 12 months? Because so I did 12 months, but
Yeah, it
would
has
you
to be
all
12 months.
like that one? But then from the 1st of Feb till the
That
1st of March is an extra month.
No, remember the 1st of Feb 2020 is the previous tax year.
Yes.
Okay, so the previous tax year ended on the 28th of the 2nd, 2020. The
Okay.
current tax year is ending on 2021. So there's 12 months here, and this guy retired 1 month before the new tax year. Does that make sense?
Yes.
So last year you would have only claimed 1 month. This year you're claiming 12.
Okay. Okay. Just
Okay.
making sure.
Hey?
No, I was saying just making sure because I also did 12
You
months.
know, 12 is correct.
Okay.
Yeah, 12 is correct. So this was 2000. Okay, 24,000 will come off as a deduction. Happy.
Yes.
Okay, interest of 1.5 was paid on an overdraft bank account used to finance the payment of a dividend. Okay, this is the interest deductions. Remember interest? Is interest allowable?
Okay, wait. This is where I got a little bit confused because I remember interest on tax is not allowable,
Yeah, well, yeah, tax
but
basically.
in
Okay, yeah, carry on.
on an overdraft, I think is allowable.
Okay, remember interest and penalties. So, in other words, prohibited deductions. In other words, if you're incurring interest on your unpaid taxes, does that make sense?
Yes.
Okay, so remember, if it's interest on an overdraft for a bank account and it's used to finance the payment of a dividend. Okay, let me see if I can find you something here. Let me show you. Okay, if you go to the textbook and we just search interest, interest deduction. Let's use that rather. Hopefully that comes up. Nope. Okay, interest would be part of your there. See, this is not allowable because it's interest on tax. In other words, it's a penalty. Okay, you'll never be able to claim this. But this is not what's applicable here. This is interest on an overdraft for a dividend. Do you agree?
Yes.
This is something completely different. Because it's a dividend, though, this might be seen as capital, but we need to check. Okay, so let's just go through there. Expenses to, okay, so this is interest, okay, when you've borrowed money. This is not borrowing money. Well, it is because it's an overdraft. Do you agree?
Yes.
Okay. Let's find a specific. See if we can find legislation showing it. Then I'll tell you. Okay, this is for low cost housing. Nope. Okay, we want the deductions. Okay, this is the improvement stuff. Financial services. This is interest received, exempt. That's interest on late payments. Okay, that's investment income. Interest, tax admin. No, that'll be part of here. Chapter 12. No, we're looking for deductions. We want chapter 11. Okay. Let's actually go to chapter because there's such a lot to go through. I don't want to go through all 255 search queries. Let's just go to the right chapter. Okay, this is a trading deduction. This will be chapter 4, page 91. Okay, so if we go to page 91, okay, all right, obviously general deduction. All right, so if we apply the general deduction, let's do that quickly just to revise. Okay, let's get the nice summarized version of it. Do they have a summary here? Doesn't look like it. Okay, so we have to go through the long bit. It's fine. Okay, so obviously general deduction. Okay, actually, do I have it open? No, I've got this one open. Let me open up 5. Okay. Actually incurred? Yes. During the year of assessment? Yes. Is it in the production of income? Ooh, that's questionable. Okay, because this is interest on overdraft but for dividends. Do you agree?
Yes.
Okay, not of a capital nature. Well, this is interest on an overdraft, but the overdraft was used for dividends. Let our expense for the purpose of a trade. That one you could probably say yes, but again, it's questionable because it's not really trade. It's related to paying out a dividend. That's the problem with this. All right, so we need to check. Is interest for dividends allowable as a deduction? I don't think so. Okay, because it doesn't meet the definition of Section 11A. But let's just check it. Okay, actually incurred definitely. During the assessment, definitely. Was it in the production of income? I'm saying no here. It falls flat here. Not of a capital nature, also questionable here. It doesn't also meet the definition. Okay, specific deductions. It's not legal expense. It's not restraint of trade. It's not copyright, patents, whatever else. Nope, nope. Not that either. Let's see if there's something specific. Not bad debt, not doubtful debts, not contributions or donations, not an annuity. It's not private or domestic insured losses. Okay, so I assume then it falls flat on the deduction, the general deduction formula. That's my initial impression here. Non-trade expenditure. This you could probably use as part of the discussion. Okay, because this is used for a dividend. Remember, this is for interest on an overdraft for a dividend, which is something completely different. It's got nothing to do with your operations, and that's why I'm saying it's not going to be deductible. It's not relating to employment. Yeah, it's not relating to employment. It's related to equity dividends. It's not a fine. It's not prepaid. It's not trading stock. Yeah, I'm going with not deductible here. But let's just quickly go through all of it. Let's just see if there's anything else maybe. Yeah, there's nothing else. Okay, so that answers the question then. All right, so what I would do for this one is I would say interest on overdraft asterisk, okay, section 11A, possible if meeting the criteria. Okay, and then I'm going to go through the criteria. So let's go to our summary. I'm just going to copy this actually because it's easier. Okay, so you would have to check all of this and then you would have to, so actually incurred, so number one, yes. Number two, yes. Number three, no. Okay, and that's what I would do just to show the working, and then I would show a null here. Does that make sense?
Yes.
Also, capital, not of capital nature. I would say no, this relates to dividends on shares. Expended for the purpose of a trade. That one you could also probably say no. Okay, not specific to trade / operations. Okay, and you can obviously motivate it a bit more, but yeah, I'm just explaining why I believe it's a no. Okay, right. Remember, these things can actually get taken to court potentially if the taxpayer disputes this. Okay, but obviously, you're going to go with your gut. You're going to go with legislation, and looking at this, it's not very likely that you're going to be able to claim this. Okay, it's more unlikely. than likely, if that makes sense. Does that make sense?
Yes.
Okay, what did you go with? Did you want to deduct this, or did you go with the same thing?
I wanted to deduct it.
Oh, you wanted to. Okay, yeah. Now I wouldn't want to deduct it here because the facts point more against than for. Does that make sense?
Yes.
Okay. All right. I forgot to label all these. Okay. All right. Point six says Denzo has an agreement with a contractor to maintain the factory machine. Okay, the maintenance contractor is paid 75,000 on an annual basis for the period 1 July. Okay, this is a prepaid expense. Okay, so obviously the tax year okay, what do we have here? 1 July to 30th of June. So paid inside the tax year 1 July to 28th Feb 2021. All right, so how much did they pay? Okay, this was 75,000 for how many months? July to June should be 12 months. Is that right?
July to June. Yes.
Okay, so 75,000 divided by 12 is 6.25 per month. Okay, so how many months do I have here? July, August, September, October, November, December, January, February. I count 8 months. Did you have the same thing?
I got 9.
July, August,
I
September, July, August, September, October, November, December, January, February. Now I'm counting 8. July, August, September, October, November, December, January, February. Count again.
Okay, so wait, July, August, September, October, November. But wouldn't it be because it's from the 1st of July?
Yeah, so I counted July. July,
So for
August,
Feb, you'd
September,
have to
October,
count
November,
an extra
December,
month
January,
because it's
February.
another 20.
8.
No, you.
Did you get that?
Okay, 8.
Okay,
Yep,
March,
you
April,
changed
May,
mine.
June. 4 months. That's 25,000. Okay, so obviously, is this less than 6 months? Yes. Less than 6 months. Also,
Yes.
less than 100K. All right, so will you be able to deduct it? Yes. Make sense?
Yes.
Okay, number 7. The following information relates to trading stock. Okay, you have closing stock accounted for in the 2020 year assessment for tax purposes was 4.5. That's the closing stock from last year, which is the opening stock for this year. Closing stock for 2021 is given as follows. Okay, just a note. Let me go to your textbook. When you're looking at trading stock, you have to use the lower of cost and net realizable value. Let me show you that. Let me find it for you here. There. Okay, opening stock and closing stock. Where's the start of it though? Here, closing stock. There. Okay, so section 22 looks at cost of stock, trading stock. Was anything else here? Okay, yeah, here's trading stock. They define what it is. Let me just show you that little bit. Where's the little bit here? Here. No, that's the market value. Where's the deduction bits? Let me just find it here. It's the lower of cost and the market value. Let me just find it here. Okay, I can't find it. I'm having problems finding a little note looking at it, but yeah, it's definitely the lower of. Well, here, there, lower. The stock had to be written down. Okay, no, that's lower of cost. No, that's a write down. No. I don't know. Can you see it? Lower of. Lower of. Lower of. Um, Here, it might be here at the beginning. There. Deduction. Okay, so no, this is spare parts. There, net realizable value. Probably earlier on. It might even be in the study guide. The study guide might be easier to find because I'm having problems finding it here, the actual words. Let me go to the study guide. I've got the study guide open as well. Let's see if I can find you something here. Where's the opening stock, closing stock? Okay, what did you want to deduct here? Did you also take the lower of the two?
Yes, I also went with market value. I remember
Okay.
seeing it somewhere because I also looked for
What
it.
chapter was this? This was chapter 5, hey, if I remember correctly. Was it 4 or 5? I think it was 5. Yeah, restraint of trade deductions. It should be here actually. If it's not in this study guide, it'll be in the other one. Yeah, here's the trading stock. Let's see where they said that lower of thing. Here, provides specific closing stock. Okay, no, that's opening stock. I know they've written it somewhere. Okay, there we go. Okay, if the market value is lower than the cost, okay, you have to use the lower of cost or market value. There's it there. Okay, it's probably better to find in the textbook. Okay, so yeah, in the study guide, it's there. Lower of cost and market value. Do you agree?
Yes.
Okay, so when you look at a question like this, okay, so your opening stock adds to the cost of sale calculation, so you would subtract that. Do you agree?
Yes.
Lower of. Oh, there is no lower of here. Well, you can actually put it in. They didn't give you market value at the beginning. Okay, so I'm going to show minus 4.5 million. Agree?
Yes.
Okay, closing stock. Closing stock minuses from cost of sales. So cost of sales will decrease, so you would have to add it back. And I think that was even mentioned in the study guide. Opening stock may be deducted. Closing stock is income, so you add it back. Yeah. Okay, so closing stock is added back. Lower of costs. Cost is 5195000, and market value is 470000. So obviously the lower of the two is the 47. Do you agree?
Yes.
Okay. Oh, we haven't finished yet. They said spark plugs were removed from trading stock and donated. Ah, okay. There's a donation here, with a cost price of 10,000, a market value of 15. The stock is included in the opening stock amount above, but not in the closing stock amount above. Okay, so that means this stock is included in the opening stock. So I need to take it out. So opening stock less the donated stock. All right. Otherwise, I'm subtracting it twice. Ooh. This must be a plus, not a minus. Okay, so I need to take out the donated stock. Okay, the donated stock was 10 and 15. Okay, again, we need to just confirm this. Go to the donated stock. Donations. Where's donations? Not here. Okay, so let's go to the donations. There. Donations to a public benefit organization. Okay, so if it applies, then you can obviously deduct all of it as long as you've got the certificate, which we do. So it'll be the lower of the cost and the net and the market value. Okay, so what was the lower amount? The cost was lower, so it was 10. Okay, so we need to take out 10 years. So this is a negative figure. I'm going to add 10. Does it make sense?
Yes.
Okay, and then we're going to say donated stock, section 18A deduction, minus 10,000 there. You've got to show it separately. Happy with that?
Yes.
Okay. Yo, there's quite a few left, eh? Okay, I just need to check time. I've got another lesson actually at 4. Okay, no, we're still doing fine. I'll finish it. Okay, 0.7.8. Okay, Denza purchases new truck costing 1.2, which was brought into use on the 1st of October, according to the binding. Okay, there. So see, here you've got a scenario where you have a truck which is a movable asset. Do you agree?
Yes.
It is not in the process of manufacturing. This was brought into use. Yeah, this is not for manufacturing. Okay, it's a delivery vehicle, and it's written over 4 years. So this would be a section wear and tear allowance, section 11E. Make sense?
Yes.
Okay, this was 1.2 million divided by 4 years times, okay, October. So it's October, November, December, January, February. I count 5 months. Did you count the same thing?
Yes.
Divide by 4 years times 5 over 12. Okay, 125,000. All right, happy with that one.
Yes.
Okay, number 9. Purchase a new machine on the 1st of January at a cost of that and brought into use and process of manufacturing. Okay, so this is section 12C, new machine for manufacturing. Manufacturing. All right, so if it's a new machine for manufacturing, 12C, it's new, so 40%. Make sense?
Yes.
40% off, how much was it? 1.5. Okay, negative 600,000. All right, point 10. Oh, we're running out of space again. Okay, let's add more lines. Okay, point 10. D purchased a second-hand machine on the 1st of May, costing 900, brought into use, process of manufacturing. The current year's capital allowance for the machine has not been included. Okay, so obviously, again, section 12C, but this is used 20% per annum. Do you see that?
Yeah.
Okay. Um, 900,000 times 20%. Right, minus 180. Okay, next, 11. Specialized computer system was stolen. This was on the 1st of June. The computer system was originally purchased for that figure on the 1st of June, and the insurance company paid out 60,000. This is for the right of over 3 years. Okay, Denza was elected to apply Section 11O scrapping allowance. Okay, so they're telling us there's a loss here. Okay, so we need to calculate. Well, obviously, the first thing would be the Section 11E deduction. Okay, so wear and tear. Okay, so how long have I used this for? The computer system was repurchased for 150,000. What else? This is a computer system, and this was written off over 3 years. Okay, so divided by 3 years times by. Okay, so when was it stolen? It was stolen on the 1st of June. So how many months did I use it for? I would have used it for March, April, and May. I would have used it for 3 months. Do you agree?
Yes.
Okay, so your wear and tear allowance would be 150,000 divided by 3 times by 3 over 12. Okay, so you can claim 12 and a half. Then we need to calculate the scrapping allowance. Okay, so we need the tax value. Okay, the tax value would be the cost of the asset minus the accumulated depreciation. Okay, when was this bought? This was bought on the 1st of June 2019. So 1 June 2019. No, that was when it was stolen. Yeah, no, it was stolen on the 1st of June 2020. Okay, so that means I've used this for a whole year. Does that make sense?
Yes. How did you get the 3 months earlier?
It was stolen on the 1st of June. So I've used it for 3 months. I've used it for March, April, and May.
Okay. Okay. All right, I get it.
Okay, because that's during the
Yeah.
tax year. Okay, so
Yes.
this would be 150 minus 150 divided by 3 close brackets answers. That's 100,000. Okay, so tax value is 100. It was purchased and you only got proceeds of 60. So there's a scrapping allowance of what is it? 40. Okay. Make sense?
Yes.
All right, number 12. On 8 September, Denza purchased and bought into use new and unused ground floor of a sectional title office block from a developer at a cost of 7 million to be used for the purpose of a trade. Okay. This is a building allowance. Okay, go to your notes for your building allowances, immovable property. Okay, this is for the purposes of a trade. So it's this one, 5%. Do you agree?
Yes.
Okay, 5% not apportioned. £7 minus 7 million times 5%, 350,000. Did you get the same thing?
Yes.
Perfect. And then the last bit, here's another donation. Okay, but this donation is $1 million. And it is, okay, so section 18A donation of 1 million. All right, here we need to check this. I think there is a limit. It's 10%, if I'm not mistaken. Donations there. Donations to public benefit organizations. Okay, not trading stock. We're looking for actual donations. Not trading stock donations. There. Section 18A, donation is limited to 10%. Okay, I thought so. Okay, so let's just find it in the textbook. Here. Donations at bequest to public benefit organizations. Right. Loss limitations. Here, section, 10%. Okay, there we go. Sequence of deductions exceeding 10%. Okay, does that make sense?
Yes.
All right, so we need to work out limited to 10% of the taxable income. All right, so I actually need a subtotal here. Okay, and I'm going to add and subtract all of these figures. Wow, where's the start? There's the start. Okay, so that gives me this figure. All right, so 10% of 19,573,500 equals 10% of that figure. Ah, man. 10% of that figure. Okay, it gives me 1.9 million. So can I claim the whole thing? Yes, I can. Therefore, the full 1 million section 18A deduction is allowable. Make sense? Make sense? Cheryl, are you still there? Well, I've lost your audio. Are you still there, Cheryl? Oh, looks like Cheryl has lost her connection. Okay, Cheryl, I'm just going to continue this. So if you're watching this video, okay, I see you back. Okay, welcome back, Cheryl. Can you hear me? Okay, I can't hear your audio. There's something wrong with your audio. The mic I see is there, but I don't see it moving. Hello, hello, hello.
Can you?
Okay, there, I can hear your voice now. All right, welcome back. I see you dropped off, connection problems. All right, so the last bit here is calculate the income tax liability of D Limited. So we've already got, obviously it was limited to 10% of taxable income. So I added and subtracted, I got that figure. 10% of that figure gave me that. The donation was $1 million, so the whole donation can be deducted. So it's 1 million minus 1 million. Ooh, sorry, why did I put that in? 1 million. Does it make sense?
Yes.
Okay, and then you've got taxable income of that, subject to tax at 28%. 28% of 18,573,500 gives you that figure. And that would be the normal tax. So therefore, the normal tax payable by this company for this tax year is that figure there.
Just a quick question. What did you use for your gross income?
Gross income was the amount that they gave you to start with.
But they said that's taxable income before the
Yeah,
allowances.
so it's before the adjustments. So basically all these adjustments that you have here, you have to provide for them.
Okay.
Yeah, so it's just a starting point. You have to start with something. They didn't give you any gross income in this question. You have to start with something. This 22,750 is what you would have had before all the other stuff. Does that make sense?
Yes.
Okay, so it's just the starting figure. It's just a starting point, that's all. I mean, they could have made this question longer, but then they would have had to have given you more marks for it. Okay, does that make sense?
Yes.
Okay, so yeah, there's the final answer. All right, so yeah, you did actually really well. Besides one or two small little adjustments, the rest seems to be okay. I'm going to say this. Okay, so this one file has assignment one as a tab, and then assignment two as a tab. Okay, so I'm going to just leave it all in one file, and then you can just use this when you're doing your workings and calculation. But I think you've done it already. You just had to check it, so it looks good. I think most of it you got right. Is that okay?
Yes.
Perfect.